Does take us to our talk of the tape, the markets according to Tom Lee, that is, Fundstrat's managing partner, head of research. He is with me here at Post 9. Welcome back.
Good to see you, Scott.
I said, so as you miss, inflation expectations spiked. You've got more tariff talk from the White House. And then I saw a report, too, from Jake Sherman, Punchbowl News. $4.7 trillion tax plan is what the Republicans are said to be discussing. I thought the market took a little bit of a move lower on that as well, just given where rates are, concerns about the deficit, et cetera. Your thoughts on all three?
Well, you know, it does seem like a pattern in 2025 as markets sort of take a hit on Fridays and maybe panic Monday. So I don't know if that's going to be the case. To me, I think the inflation headlines from UMich they're not great to see, but also I think that they are messed, or there's a political component to this, because if you break that down between Democrats who see 5% inflation and Republicans at zero, the blend is actually pushing this number up. But to me, it just gets messy around elections.
Yeah, but I mean, let's be honest. There are broad concerns about parts of this agenda from this White House, including, I might add, from the Fed, that it could be inflationary. When rates are already more elevated than I think the Fed would like to see. They'd like to be able to cut more, but their hands are tied. And one of the reasons their hands are tied because of tariffs and unknowns about inflation. Fair?
That's fair. I'm not sure the UMich survey reflects their assessment necessarily of the tariffs as much as, let's say, the bond market. And the bond market seems less concerned about it because, as you know, yields have backed off from 4.8 towards 4.5. But you're right. Tariffs are a reason to be uncertain. But so far, I think if I looked at how markets reacted, I think they've actually taken them in stride.
I mean, your biggest takeaway thus far, you say, is that the market's proving resilient, which, I mean, let's be honest, too. Since the start of this bull market, it's been one heck of a resilient market. It's been able to deal with almost anything thrown in its face. You've had a couple of panic moments. Monday, off of the tariff news, last August, with the unwind of the carry trade, and then we just continue to set new highs.
That's right. And I think in 2025, a lot of investors thought maybe the playbook would change because we just put 20% years behind us. But I think with January being up 2.7%, and I think these sell-offs being bought, it does feel like the same market that we had last year.
What are you worried about?
Well, I'm worried about sentiment becoming too bullish, but actually But it's turned the other way. You know, sentiment actually has weakened pretty meaningfully. And I'd worry about a policy error from the Fed. And as you know, the bond market still thinks there's more than a 20% chance the Fed hikes this year. I think it would be obviously a policy error if they raise rates.
What about a policy error from the White House?
That's also something markets worry about, yes. But so far, I would say that the news that we've seen on tariffs, they've had more bark than bite, meaning they've proven to be opportunities for investors to buy.
Tom Lee goes out of his way to encourage investors to buy Nvidia before February 26th, the date where Nvidia will reveal its fourth quarter earnings. It is safe to say that the DeepSeek debacle might be in the rearview mirror by then, as people get excited for the future of Nvidia and how the stock will surge. The tech world waits with bated breath to see whether the AI powerhouse will maintain its dominance, or if a small tech player will rewrite the rules of AI investment. Welcome back to Investocracy.
What would you buy?
Well, the big news this week in our minds is the ISM moved back above 50. That really does point to earnings dispersion improving. So I like industrials, you know, the financials. I mean, the small caps, which have been, you know, not a great outperformer yet, but we still think small caps are going to do well this year.
What happens if some of the uncertainty around D.C. and policy has a more negative impact on not only sentiment, but actual transactions? I saw a stat today that M&A is off to an incredibly slow start this year, when part of the narrative coming into this year was animal spirits. Can't tell you how many times I heard that phrase over the last 3, 4, 5 months.
Yep.
What if we don't get that?
I mean, it's still too early, right, because we're only 1 month into the year. The recovery in optimism, both in the NFIB and even the ISMs, I do think it would sort of argue CEO confidence should be better. So I would expect M&A.
We had all but one of the mega caps report. We got to wait a couple more weeks for Nvidia. What's your takeaway?
Well, it's been a good earnings season so far. The Mag 7 as a group hasn't been great. You know, in fact, they've been a drag on the S&P this year. So part of it is it's telling me I think a lot of good news is baked into some of these names, and especially with CapEx going up. But it doesn't mean I don't think they're market performers. I just think the outperformance this year comes from financials, small caps, industrials.
Canaccord Genuity today on the Mag 7. We think it's fair to say this has been the softest quarter for this group collectively in the last few years. Is that a meaningful softness that maybe the best times for a while are behind it?
Well, and that's a relative term, right? Because on an absolute basis, these companies are growing far faster than the S&P. But from what's priced into the stocks, clearly it wasn't a market surprise. That's why year to date they haven't been great.
What about you're paying up, in some respects for declining revenue growth, especially in key areas like cloud for some of these players where that's an essential part of why you were willing to pay up in the first place? Does that matter?
Well, these are secular stories. So to me, stocks might actually underreact to earnings and they might overreact to earnings over time, and they may consolidate for several years. But to me, the key drivers for why you want to own the Mag 7 haven't changed.
Seems like these names have sort of separated themselves from each other. If you look at a chart, for example, of Meta, it's been magnificent. It's like the Magnificent One.
NVIDIA's relentless innovation and superior AI capabilities have driven its stock to dizzying heights, catching the eye of savvy investors eager to be part of this growth story. Of course, the stock market can be as unpredictable as a roller coaster ride, and just as thrilling. Enter DeepSeek, a startup that claims to have trained an AI model for substantially less investment than what NVIDIA's clients typically spend. This revelation caused NVIDIA's stock to slide by about 15% recently, making headlines and prompting investors to reevaluate their strategies. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Nvidia stock has been hit hard out of late as well. In fact, Nvidia is down 14% in just the past month. A lot of that follows DeepSeek's large language model announcement. Remember that? But despite the recent decline, Euronext Guest thinks this could actually be a buying opportunity to get back into Nvidia. Joining us now to talk about it all is Joe Moore. He is semiconductor analyst at Morgan Stanley. Joseph, we've now had, a week, 10 days to actually absorb and try to learn about DeepSeek after it kind of came out of the blue and hit us, a lot of us very hard and very quickly. What have we learned, and what makes you a little more optimistic about NVIDIA?
Yeah, well, look, I think it's a very impressive model that was created out of China. But the space here is one that has a lot of innovation over the course of any given year, any given month. And I think, we see this as more of an evolutionary gain, where DeepSeek was able to get a little bit more out of a small investment than we've seen in the past. But our checks would say that investment in the space remains very robust. We're not seeing people rethink the larger kind of cluster, what we call large cluster training models that people have been talking about. There's sort of very clear evidence that persists. So we still quite like the stock. And I think, Jensen has talked about providing 1 million X performance in kind of AI capability in the last decade and doing it again in the next decade. You're going to get deflation along the way. You're going to get indications like this where, people are doing things cheaper and better. And we think that's part of the narrative here.
NVIDIA remains unfazed, however, as its latest chip is the fastest and most efficient on the market, an edge that helps retain its leading clients who demand the best technology for their ambitious projects. And as NVIDIA rolls out its Blackwell architecture, the company is set to deliver its first revenue reports from it soon, predicted to reach billions. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yeah, you look at that and you think, okay, well, DeepSeek, and listen, I want to be clear to our viewers and listeners. Some people think DeepSeek is a complete BS. I'm going to use my initials in a nice way, Joseph, and that maybe they're actually using NVIDIA chips and it's a chat GPT, whatever. Let's put aside sort of all the, quote, conspiracy theories over here and just look at NVIDIA's valuation. It is still an expensive stock? How would you defend that valuation number?
Yeah, well, it's actually not that expensive of a stock on earnings. I mean, they're very profitable. So if you think about price to sales, it's quite expensive. But we see the stock trading at a low 20s multiple on next year. So the question is, are those earnings numbers right? Are we going to stay on the trajectory that we're on? I think that we are. I think, in fact, we'll accelerate in the back half of the year. And you've actually seen some of the other AI alternatives, companies that provide custom solutions into AI, such as Broadcom and Marvell, now trading at a premium to where NVIDIA's trading. So it's my view that as we get fully into this Blackwell cycle, we'll get that earnings momentum back quite a bit stronger in the back half of the year. And I don't think it will prove to be that expensive. But you guys talked about the perils of semiconductors early on. I'm definitely aware of that. And when you have a gold rush like this, things can slow down. The thing is, they're just not right now. We're seeing, despite all of the anxieties around DeepSeek and the next generation models, we continue to see quite a bit of growth through at least the end of this year.
And I thought perhaps one of the more notable developments this week, Joseph, was actually what happened with AMD. Because if you wanted to be really bearish on NVIDIA, you could say, well, you could use AMD chips. And I know people say maybe some of the mega caps use their own chips and things like that. But what do you think AMD's results showed us?
Yeah, well, look, AMD's done very well. Year one, they did over $5 billion in kind of a startup product, a very impressive number. But NVIDIA is going to have around 85% share when 2024, kind of all the numbers are closed out. And I think that number actually can rise slightly in 2025. It's competing with NVIDIA is not easy. If it were, a lot of other people would be doing it. And so we're enthused for AMD, for Broadcom, for Marvell. We see a lot of opportunity in this AI space. We like all of the stocks. But NVIDIA is our top pick because they are in a very strong position right now. And going into a product cycle where they're delivering on a capability of scaling out at a rack scale level and a data center level in a way that AMD is kind of still working to be able to do. So enthused for AMD's long-term opportunities, but I think NVIDIA will have more momentum this year.
As the company prepares to release its earnings report, and with its promising new architecture and strategic partnerships on the horizon, NVIDIA's potential is clearer than ever. Current forecasts suggest a prosperous path ahead, with analysts predicting exponential market growth. What do you think about NVIDIA's current situation? Is it a tempting investment opportunity or is caution warranted? Share your perspective. Finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.